Joining me now is Derek Scissors, Asia economist at the American Enterprise Institute, along with Nancy Lazar, chief global economist at Piper Sandler. Welcome to you both. Nancy, let me just start with you because the autos piece of this is really starting to get a lot more attention. What are China's ambitions here, and does it pose a big potential problem for stocks like Tesla?
China is trying to become self-sufficient, quite frankly, no different than what we are trying to do here in the United States. We're both trying to be less dependent on one another. And so the bottom line is basically China is done driving multinational earnings as they've been doing, say, for the past 20 years. The transition actually started the last cycle, but it's obviously intensifying here as we move through 2023 into 2024. So the message to U.S. companies in China is tread lightly. They want to become self-sufficient. That means using less U.S. products. And so we think that they will continue to be a major headwind to a lot of U.S. multinationals.
Sure. Why do you think autos in particular, Nancy? This is getting more attention. You know, the Journal has written about how BYD is the world's biggest car maker. You know, their vehicles are showing up everywhere. Is there a difference between just, you know, a competitive marketplace where they have an edge and, to kind of put it more bluntly, the risk that China floods the auto market globally with all of its kind of products and pipeline?
That's not new. They've done it before. They did it with steel. They did it with solar panels. They need something to, no pun intended, drive growth. And they seem to have chosen both EVs and batteries. And obviously, they've been investing in those sectors very, very, very aggressively. And so it's a real risk to the Western auto industry. China is subsidizing those industries. They're able to charge less for their prices. Tesla, quite frankly, has figured this out and is cutting prices. They're ahead of the game compared to some of the other Western companies that are highlighting how expensive it is to build these new autos. And then we have the UAW settlement. Are they going to increase wages significantly? And so it does create quite the predicament for Western companies. That, to me, is what the real focus should be by Western governments and companies right now. What is China's goal in the auto sector? Not so much what China's GDP is going to do over the next couple of quarters. They're going to keep that economy running. This, to me, is a major issue.
That's really fascinating. Derek, maybe given your long kind of track record covering this, you could add your own opinion on what you think about autos in particular. Ruchir Sharma also wrote a column for the FT about China, saying, have we reached peak pessimism? And his conclusion, by the way, wasn't necessarily no. He kind of said, you know, maybe it gets better or maybe there is, a crisis coming. And one of the few positives he could cite was actually the auto market, which is ironic.
Yeah, I think Nancy's put her finger on it, and you have as well. There's a story here that gets conflated with China's actual performance. And the story here is the Chinese have moved up the technology ladder. Not that they're at the top, but they've moved up. And they are competing with Western multinationals in more areas, and the Western multinationals are frightened. And the fact that they're frightened is relevant, but it doesn't mean China's economy is collapsing. It means their prospects in China are dimming. On the econ side, straight econ, I think you said it at the outset, I think we're seeing a little bit of a turn in the economy. So it's going to be a little bit better in the second half of the year than the first half. It's already better than last year. So people talking about a crisis, that doesn't make much sense. If you were talking about a crisis this year, you should have been talking about it last year. My answer to whether we've reached peak China pessimism is definitely no. 10 years from now, the Chinese economy will be slower and weaker than it is. That is almost a guarantee unless you see a huge policy reversal. So short-term peak pessimism, maybe even probably. Long-term peak pessimism, no, this is just the start. China's going to get worse.
One more quickly for each of you. Derek, given that, if you were consulting with a multinational U.S. company who was trying to figure out, like, take a Starbucks, right? It's not an area that's nationally sensitive, but they can either decide to invest more there or not. What would your advice be?
Well, it isn't nationally sensitive, so the door is open for Starbucks the way it's not for some other companies, and we're starting to see that with Apple and Tesla. But you also have to realize that the nationalism matters even in insensitive topics. So for Starbucks, the question is, you can sell a lot to Chinese customers unless you offend the Chinese government. And then they'll target you on nationalist grounds, even though coffee doesn't matter very much. And that's a trade-off. How nice do you want to be to the Chinese government in order to sell?
That's a great point, and a line that a lot of companies have struggled with the last couple of years.